It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, June 29th, 2016. Getting ready to finish up this month of June. We got one more day, though, tomorrow. Markets are trending well going into Thursday's session, and we continue to see more signs of life and more signs of opportunities post the Brexit vote and pre-holiday weekend. Get a big holiday weekend coming right around the corner. We'll talk about that more as we go. Crude oil, S&P, Euro, and the gold, they're all looking pretty bullish this evening, which means something's got to give, and we have a great plan for you guys going into Thursday's trading session. As you guys know, before we go into the charts and start looking at the schedule and the plan for tomorrow, the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, there's a link in the description of the YouTube video. Follow that link. Come over and join me here on the blog. And while you're watching the full-length version, don't forget, if you're not a member here at School of Trade, I've got a free pass for you to come out and join me in the trade room as a guest. Also, right below the video, don't forget to register as a member of our mailing list. Your name, your email address, verify your inbox. I'm going to send you a verification email, and I'll send you an email every evening when this nightly newsletter is ready. Below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Follow that link below the video on the blog. And don't forget, if you'd like to learn more about what it means to be a student here at School of Trade, we have a great free trial membership. You're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And I'm always here standing by to help you guys and gals out if you have any questions along the way. Got a busy schedule. Markets are looking beautiful going into Thursday's session. Got a few more days left until the 4th of July weekend. Remember to come back after 4th of July with those fingers and toes, right? Big weekend coming up in the U.S., one of the best holidays of the year, at least in my book, right? Doesn't get much better than the 4th of July weekend here in the U.S. I'm sure you guys have some exciting plans in store. We're not quite there yet, though. We've got Thursday, June 30th, the last day of the month of June. Now, real quick, remember, the end of the day, the end of the week, the end of the month, the end of the quarter, what happens? Traders take bigger risks. We expect to see a little bit more volatility going into the end of the month, but at the same time, we also can expect there to be a little bit of a self-fulfilling prophecy, whereas we're coming out of the Brexit vote last week. We only got a few hours left until the holiday weekend comes around the corner. If I had to guess, I would guess tomorrow is going to be an early in, early out as traders try to extend a 3-day weekend into a possible 4-day weekend. Keep an eye on the volume tomorrow after 11 a.m. Eastern time. I'm sure London will be great. The U.S. morning session will be very good, but I would assume tomorrow afternoon might be a little bit slower. I'll tell you, I would love to get another afternoon session like we saw today. We saw a fantastic run higher on pretty much everything to finish up the day today, and just an incredible week it's been as we came out of the Brexit, stumbled around a little bit Monday, Tuesday, and now, of course, Wednesday into Thursday, really looking like we have an excellent opportunity to finish off this month, finish off the week with a bang. Starting out tonight, though, looking at Wednesday, June 20 the 9th, we do have some important news coming from our good friends in Japan. 7:50 tonight, the industrial production number. That'll be just shortly after you get my newsletter video this evening. Heads up on that if you're in Australia, if you're in Asia, or if you're going to be up trading the Asian session here this evening. Tomorrow, Thursday, June 30th, again, end of the month, right? We do expect to see more volatility end of the month. Now that I think about it, it may have already been shaken out, with that Brexit vote. So there may not be that much kind of excessive volatility tomorrow. But I will expect, though, tomorrow to be a day where a lot of traders come in for half the day. Friday, of course, is a half day already. But, a published half day is usually kind of a quarter of a day, really. So tomorrow really is the last full day of trading. And that usually leads to good volume, great opportunities. And with the end of the month, I would expect there to be a little bit excessive volatility, right? Because of kind of the gambler that comes out of people when they're either up or down on the month, right? Obviously, with that holiday weekend coming around the corner here, watch volume tomorrow afternoon. If it's just sitting tomorrow afternoon, you know why, right? People are out there stocking up on the fireworks, the barbecue grill getting cleaned out and ready for the weekend. Going into tomorrow's session, though, again, news out of Asia. We don't have really anything big until the GDP report coming out of Great Britain. We get the flash index at 5 a.m., CPI, right, PPI, ECB minutes at 7:30. I'm sure those ECB minutes will be a classic, right? I'm sure this will be some great reading tomorrow morning at 7:30 a.m. Eastern time. And then, of course, we go into the U.S. session, 8:30 a.m. jobless claims, 9:45 Chicago PMI, and that's all we're going to get here in tomorrow morning. Jobless claims at 8:30. Monthly GDP from our good friends to the north. And, of course, we got Chicago PMI at 9:45 a.m. So news is weighted towards the front half of the session tomorrow. Be aware of that. The big numbers, though, coming out early in London. Again, those ECB minutes. I want to read those ECB minutes tomorrow because, of course, they'll be from a few weeks ago. I would be curious to see what was written about on the EC minutes, of course, before the Brexit vote was finalized. And again, we'll talk more about the news in tomorrow night's session. Got a bunch of news here coming out late in the session on Thursday. This may lead to a little bit of a lower volume tomorrow afternoon as well. So be aware, early in, early out tomorrow. Watch out for the volume in the afternoon session because we are going to be heading into that holiday weekend. And we do have an early close scheduled for Friday. We do have a 2 p.m. half day on Friday. And usually when that happens, usually traders see it as a reason to either get in real early and do very minimal work on Friday or, skip the day altogether. So it's definitely going to be a real quick finish to this week after we finish up tomorrow's trading session. We'll talk about it again tomorrow, obviously, once we see each other on tomorrow night's newsletter. Let's jump right in. We got a busy one tonight. Crude oil is bullish and trying to retest the highs after today's inventory report sent prices racing back to $50 a barrel. Exactly $50 a barrel, as you can see. Now, as expected, we talked about this last night, the bulls had control for the entire session today with a bull spike in channel that trapped low before literally shooting through the highs all the way up to the price magnet, that big round number at $50 a barrel. We can easily see the buyers took their profit at the 50, and sellers appear to have aggressively sold as well. They didn't even blink at the moving average pullback. This finished the session with a strong bear leg down. Now we know whenever we see a strong move in one direction, we're normally going to see a follow-up leg. We assume that will give the sellers a reason to sell that second leg back into the battle zone down at $49 a barrel. The buyers want to go back to 50. And the most reliable trade will be with seller failure after this strong move lower. I don't want to buy this right now. Not after that strong push after that measured move. And look at how the market opened up here after that green candle finished off the session. This looks very bearish in the short term, and it will definitely be wise for buyers right now to let the sellers try a few times because there's plenty of room to go back up to the highs up at $50 a barrel. The Sellers need to hold this next pullback and will be hunting for that $49 level, but then we assume more buyers will be waiting, right? We assume that as this price pulls back, more buyers will be waiting to go right back to that $50 a barrel area here. On inventory days, we can pretty much look at it before the inventory report and after the inventory report. Now, looking at the chart, can you guess where the news came out today? Yeah, right there. So, of course, the news report comes out. Price slams higher. It's very common for news to result in a spike in channel. This is no different here, right? So a bull spike in channel. Beautiful example of a trap low and then just punches. I mean, there was more aggressive buying this afternoon after that trap low than there was during the actual news event itself. What was really impressive is that literally turned off that $50 a barrel like it was nobody's business. Now, most of the time, strong move in one direction leads to a second leg. We should not be surprised the measured move was respected so well there as well. Blame it on the 50, blame it on the measured move. The bottom line is we clearly see buyers taking profit at the high, and look at the strength of this move coming back down. Now, normally, and we talked about this last night on the euro, right? Remember the euro? Big, strong bull move on the euro, but equal amounts of bearishness coming right back down. This is the same thing. Look at the strong move out of the bulls. But again, think about this. I would assume the buyers have pretty much spent all their bullets the news comes out, they're buying. I would imagine the buyer is just unloading into this on the way higher, because it does not look like they had any more ammunition left, right, in the chamber, because you can see how clearly everybody gets out, sellers attack it, and doesn't even blink as it pulls back to the moving average. That definitely tells me this is a very strong move, and I will be looking for sellers to make another leg down into the battle zone down around that 49 to 48.74 area. Now, sellers, you guys have the chore right now of holding that next pullback. Buyers, you guys are watching for the sellers to try once, try twice, and if they fail, that's going to be your green light here to be a buyer. You have to anticipate with such a strong move lower, the sellers are going to try. So keep an eye out for where they're trying, find their stops, and then buy into those stops for a quick move back up to that measured move. Now, don't forget, measured moves are market objectives. When we see the market reach an objective, I probably sound like a broken record right now. When the market reaches an objective, what happens? Two-legged correction, back to an area of support, and then double it up. Once we get back to that high again, if we get back to the high, I don't want to be too overconfident with this, right? Open mind, of course. If we get back to that high again, then it's really anybody's game, right? We know the objective is to get back to the measured move, is to get back to the 50. Are we going to blow right through it and keep going? Where, of course, then at that point now, we'll be looking for a larger measured move tomorrow morning. Or will we see price just literally collapse back down on profit taking? And once we see the bears make a new lower low and hold a pullback on that, that's going to be your clue that this market is ready to reverse. Bottom line, we got to wait and see what happens in the next few hours here as we come out. Strong move lower tells us to expect a second leg down. Buyers be waiting to see if that fails to buy back up to the 50. Once we get there, what do we do from there, right? From there, it's really anybody's ball game, because we anticipate that to be the ultimate objective for the bulls right now. Heads up, though, if you're a buyer, this is really where I would imagine a lot of the long-term buyers are going to be trying to buy those dips, right, back up to those highs. And also, if you're a seller, be careful, because we don't want to forget about that $49 a barrel area. There's a rising support trend line here. It's not really going to be until we get below that area and can hold below that area that we can really start thinking about a full-blown reversal. That is, of course, before we go back to retest that high again. Pretty good plan there on the crude. I think a lot of it's going to come to fruition here in the next few hours as far as what we're seeing, right, coming out of Asia. Now, boy, oh boy, look at this S&P. Look at this S&P. So, the whole end of the world, death spiral. I read a stat that said $6 trillion had evaporated from the financial markets. Well, guess what? It just came back. We found it. It didn't go very far. They found it. Oh, whoops, sorry. I wonder if the news media, I wonder if they'll report that back. Just touching base again with you folks, we seem to have found 4.5 of those 6 trillion that we thought vanished. Yeah, apparently it was just a good buying opportunity on the way back to where we were last week. Now, obviously, we're a little bit too early to say we're going back to 2100, right? I'm sure all the bulls would like that, but I really hope that this gives you guys another example of just many, many, many examples that we get of why the only thing we should be listening to are the candlesticks on these charts. All right, I'm going to leave it at that. If you watch my newsletter, you know exactly what I am talking about. All right, onward and upward we go. The whole death spiral thing. Anyways, E-mini S&P is bullish after completing a bull wedge on the way back to its pre-Brexit levels from last week. The bulls had firm control for the entire session today with an aggressive bull wedge. I want you to look at how aggressive this market is, because you're going to see a stark contrast of the euro later on in this video. This is a very good example of a market where only the buyers can make money in this market. Hold that thought. I'm going to come back and talk more about that when we get to 2 more charts from now on the euro. Where was I here? Aggressive bull wedge. That aggressive bull wedge successfully got to its objective and pushed right through the target with what appears to be an exhaustive end of the session. Exhaustion meaning the candlesticks got bigger as the price went higher, right? Look back in time, you don't see that very often.